Here are 4 metrics that will help you in a bear market. Winter is coming. Not for Winterfell, but for the crypto market, and it is definitely going to be a long one. We are in the midst of another crypto bear market, and in this video, we will go over the specific indicators that you should observe before investing in a bear market. The ideal case scenario is to invest when we have hit rock bottom, but that is extremely hard, and even pro traders have a hard time timing the market. The first question you need to ask is, how do you know if the crypto bear market is upon us? A general rule of thumb is that a crypto recession is marked by a fall in majority prices by 20% or more. When prices start to free fall without any end in sight, you can be sure that a long, slow phase is coming. In a crypto bear market, asset prices will fall anywhere around 50 to 90% from their all-time highs. Secondly, crypto companies start laying off people. That's right, big companies like Coinbase and Gemini have been continuously laying off people in this bear market. And if you are working a job in the crypto sector, our prayers go out to you. As we mentioned above, there are no ways to know when a market is at its bottom and whether we will go any lower or not. Your aim should be to invest when investor sentiment is shaken and prices are low, so that you can make the best gains on your investments. Here are 4 different indicators that will help you understand the crypto bear market and accumulate your desired cryptos at the best rates. Indicator number 1 is the Crypto Fear and Greed Index. One of the simplest ways to see the condition of the crypto market is to look at the Crypto Fear and Greed Index. Since it is a fledgling industry, the crypto market is highly influenced by narrative and emotion, and this indicator will help you understand the emotion of investors. When investors show too much greed, it is bound to send prices higher, which is not an ideal entry point for you. Actually, it's an indication that you should sell your investments. Conversely, when investors are fearful, the prices of cryptos will drastically fall across the board, and this could be a great chance to start dollar cost averaging your portfolio. If you don't know what dollar cost averaging is, well, you're in luck. Head on down to the description and click the link to our comprehensive crypto course, where you not only can learn how to dollar cost average, but also how to multiply your wealth. The second indicator we're going to observe is called the Relative Strength Index. The Relative Strength Index is a technical indicator and measures the speed and rate of change in prices in the crypto market. To figure out when a bear market is approaching its bottom, we need to see the RSI of Bitcoin, which is the biggest crypto and also the trendsetter in the crypto market. When the RSI indicator is 70 or above, this means that a particular crypto is oversold and prices are more likely to come down rather than go up, unless it's a bull market when prices keep on pumping. Similarly, if this indicator is 30 or below, it means that the asset is oversold and signals a great buying opportunity. In previous bear markets, the market has usually bottomed when this indicator reaches 16 for Bitcoin. So when Bitcoin RSI is around that range, it is a great opportunity to accumulate your crypto because these might be the best prices you will get in a long time. However, a better strategy would be to start accumulating your crypto when RSI is around 50 and continues to show a downtrend. If you don't know how to calculate the RSI of Bitcoin or any other currency, we also teach that in our course, but you can also find the Bitcoin RSI by visiting this link in the description or below. This website publishes the Relative Strength Index of Bitcoin every day and is an extremely simple method of knowing when to start investing. Moreover, you can also check the RSI of any other crypto asset you are thinking of investing in. If the asset is in an overbought range, it's not a great entry point, and chances are that prices will come down. And if the asset is in an oversold position, chances are prices will go up. The next technical indicator you should look at is called market value to realized value, or MVRV. The MVRV is a ratio of the market cap of an asset versus its realized capitalization. By measuring these metrics, we can get a sense of when prices are above or below fair value, which will consequently give us an insight into when we should buy. High MVRV indicates that profit has not been realized by the investors and they will do it soon. Hence, this is not a good time to enter the market, but rather a good time to sell the assets you are holding. On the other hand, low MVRV indicates a great time to start accumulating. If the MVRV is 3.5 or above, it could signal a top for the market. An MVRV of 1 or below has historically signaled a market bottom, which also presents the best opportunity to accumulate. You can easily find out the MVRV from a blockchain analytics website like blockchain.com or CryptoQuant by searching it on Google. Google's your friend after all. The last indicator we will use is called the simple moving average. The simple moving average is quite simply an average of the price of a crypto asset over a specified time period. The simple moving average can be easily calculated by adding all the prices and dividing it by the number of days. When the simple moving averages are plotted, you can see the trend of a crypto asset, which might make it extremely easy to make a decision. It is best to see the longer picture and not look at prices for a week or 10-day period, as they might not give you the best picture of the price of a crypto asset. The simple moving average gives you an insight into the price trend of the crypto asset and guides your investment decisions. It goes without saying that if the simple moving average is lower than in previous periods, it means that prices could be set to make a rebound. If the price breaks above the simple moving average, it can signal a buying opportunity, and if it continues to do so, this is a good time to get off your seat and buy that asset you have been observing. On the other hand, if the price breaks below the simple moving average, it could signal that the asset might go down and is a signal to sell. If you want to check the simple moving average of Bitcoin, you can visit this website below, which can also be found in the description. This chart can be used to zoom into a specific time period or even view the Bitcoin price trend over the long term. Before we let you go, we must remind you that this video is not financial advice. Please do remember that these indicators are not definitive and should not be used blindly. Make sure you do your own thorough research before investing in any crypto asset, because no one can predict when prices will go up or down. Try to use all these indicators in conjunction with each other rather than just relying on one indicator. If all charts signal buy, be pragmatic and go out there and start dollar cost averaging into your favorite cryptos. Lastly, don't try to time the bottom, because as a renowned crypto trader and educator Cred once said, the bottom is usually obvious in hindsight, just like the top. That is all from our side. Make sure to subscribe to the channel and leave a like below so that the algorithm can feed you more videos on how to nail this crypto bear market.